In a letter to Benjamin Graham, dated January 14th, 1957, the writer stated, "The art of managing a fund is fascinating. It has its share of headaches, but it can be quite rewarding." This letter was written by a student of Graham who had just opened up his own firm, one of the most successful investors that you've probably never heard of. His name is Walter Schloss. Walter Schloss was a value investor who owned and operated his own investment firm from 1955 up until 2001. He was renowned on Wall Street for his overall investment performance throughout the years. I've had the privilege of learning about Walter Schloss through my work as a research assistant on the Super Investors of Graham and Doddsville project, which focuses on research as it relates to the disciples of Benjamin Graham, the father of value investing. Although he was quite popular on Wall Street, most people have never heard of Walter. Thus, this presentation is intended to provide you with an opportunity to see life through his experiences and learn from his approach to investing. As we take a dive into the life of Walter Schloss, we will take a look at his biography, investment philosophy, and overall investment performance. But first, let's explore the relics of a life long lived, that is, the biography of Walter Schloss. Through our research, we've been able to get a glimpse into Walter's life through his early years, middle years, and even a bit of his later years. On August 28th, 1916, Jerome and Evelyn Schloss had a son, Walter Schloss. Walter's parents, siblings, Marjorie and Isaac, and grandmother all shared a three-bedroom apartment in Manhattan. After completing high school in 1934, Walter didn't pursue university, but instead decided to work for Carl M. Loeb and Company. While working here, upper management recommended that Walter read Benjamin Graham's book titled Securities Analysis, and so he did. After reading the book, Walter decided to enroll in two of Benjamin Graham's courses in 1936 and 1939 at the New York Stock Exchange Institute. This is where Walter Schloss truly fell in love with the value investor mindset. Roughly 3 years after taking his last finance course, Walter enlisted in the Army on December 9th, 1942, to serve as part of the United States Signals Corps. In support of World War II, Walter served in Iran, where he would assemble the Studebaker trucks to help the Russians during the war. In 1946, shortly after World War II, while working in the Army at the Pentagon, Benjamin Graham wrote Walter Schloss, inviting him to come work with him as a securities analyst at Graham and Newman. Walter would leave the Army to work alongside Benjamin Graham for 9.5 years. It was here that he was able to learn and grow his circle of competence as a value investor. In 1955, Benjamin Graham had advised Walter that he planned to retire and move to California. However, one of Graham Newman's stockholders informed him that if Walter opened up his own investment fund, he would invest. This provided Walter with the opportunity to start his own firm, and in 1955, with just $100,000 in capital, he did just that. Walter was able to attain a space in the office of another investment firm, Tweedy Brown, which was also located in New York City. Walter worked at a modestly sized office without a secretary, clerk, or a bookkeeper. He was frugal, to say the least. In a letter addressed to the Lantana Group dated April 15th, 1994, Warren Buffett stated, "I think Walter's operational style should be a lesson to us all. In effect, Walter's running his office for a year on what it cost Berkshire to start the engines on the Indefensible." This was Warren Buffett's way of commending Walter for operating a multi-million-dollar business with very, very little overhead. Walter worked alone up until 1973, when his son Edwin joined the partnership. It was at this point the firm became known as Walter and Edwin Schloss Associates. In 2001, both Walter and Edwin decided to liquidate their fund, as they were no longer able to find any cheap stocks to buy on the market. Upon liquidating the fund, Walter lived out the rest of his life in the city of New York. Walter loved the New York Yankees. He enjoyed bird watching in Central Park, and, like Buffett, he excelled at the game of bridge. In 2001, Walter married Anne Person, with whom he met in France in 2000. The two would spend their time traveling, going to the theater, and having family get-togethers. Sadly, Walter passed away in 2012 at the age of 95. It's from this vast array of experiences that Walter's investment philosophy came into fruition. Walter's investment philosophy, veiled from the teachings of Benjamin Graham, is the backbone to his decision making and played an integral role when he selected stocks, diversified, and performed equity analysis. Typically, Walter wanted to purchase stocks that fell in the small to mid-cap range with a depressed market price, one that had little debt and a performance record dating back at least 10 years. When selecting a stock, Walter perused the new lows list to find stocks that are trading near their 52-week low. In his eyes, these stocks were an indication of a possible bargain. After identifying these stocks, he would verify that the companies had no long-term debts, as he believed this greatly increased the risk of his investments. He also looked at their price and its relation to book value. If it was trading below, Walter saw it as a potential bargain. Lastly, he preferred that management should own a substantial amount of stock within the company, illustrating that they have a stake in the company's success. Diversification was important to Walter, as he would hold up to 100 stocks at one time. However, he would never put the same amount of capital in each stock. If he liked a certain stock, he would put a little money in it. If he had slight reservations about a stock, he would put a little money in it. He believed that if you don't own a stock, sometimes you don't pay enough attention. If the stock's price would drop, but the fundamentals remain intact, he would purchase more. When performing equity analysis, Walter trusted his own instincts. Walter did not care about market timing, nor did he speak with the management of companies, as he felt it clouded his judgment. He never used a computer or the internet. Instead, he would solely rely on the numbers of Value Line and the annual reports of companies. In terms of industries, he always cautioned about anything that fell outside his circle of competence and felt much more comfortable dealing with older industries like manufacturing. This philosophy proved to produce very favorable returns throughout the duration of Walter's career. This can be illustrated by comparing Walter's rate of return against the S&P 500 index and amongst his peers. In a book titled Walter Schloss, Life and Career, published by Value Walk in 2015, Rupert Hargreaves compares the performance of Walter's investment firm versus the S&P 500 index. Over the course of his career, Walter Schloss had a compound rate of return of around 16% per year versus 11% of the S&P 500. To illustrate how well he performed against the market, this figure shows how $1 invested in Walter's firm compares to $1 invested in the S&P 500 from 1955 to 2001. Rupert Hargreaves then cross-compares the performance of Walter Schloss to that of his fellow peers, Warren Buffett and Charlie Munger. Walter performed exceptionally well when compared to his peers. Looking at the years 1962 to 1975, you can see that Walter produced an annualized return of 16%, which is approximately 4% lower than Charlie Munger and 7% lower than Warren Buffett. Although his returns were much more erratic than the others, the power of compounding can be seen in his overall performance. Investors today can learn a great deal from the legacy left behind by Walter Schloss. When looking back, we can see that Walter's experiences helped shape the direction of his life, both personally and professionally. It's these experiences that grounded his investment philosophy, which in turn produced annualized returns that will be remembered throughout history. In his self-published book titled The Memoirs of Walter J. Schloss, A Personal and Family Story, published in September 2003, Walter suggests that you should always pursue what you want in life and never let dogma get in the way of your dreams.